Mr. Lockhart, I'd like to ask you about the Mortgage Partnership Finance, the MPF program. One of the draft bills we're considering for this hearing involves providing additional flexibility and statutory certainty for acquired member assets, AMA programs like MPF. There's a lot of Wisconsin banks and credit unions that use MPF, which allows them to offer traditional 30-year mortgages to their customers and transfer the interest rate risk to the FHL Bank of Chicago while retaining the servicing of loans, which is important for many consumers. Try and help me understand why you use the MPF program and how it benefits community banks and consumers.
Thank you for that opportunity for that question. The reason why we use the MPF program is because we know how important it is to fund mortgages in our community. In fact, mortgages are one of our major pillars in terms of our bank, in terms of how we operate. We have a department, we have a complete program surrounding that, and FHL Bank's programs through MPF help us do more and help us do things more effectively and more broadly. Not only, as you said, are we able to take the asset off of our books and put it into MPF program, we're able to service the loans locally, which means we get to maintain that relationship with the customer, and that's a huge value. For a community bank, we're all about relationships and trust, and to be able to build that community with our constituents and our customers, we call it doing life together. And one of the major points of doing life together is when we talk and help people with their homes. So the MPF program helps us do that, and it helps us do that not only by being able to sell the loans to the bank, but also through those other programs I mentioned earlier. We're able to deliver real value to people who have lower incomes with the mortgage rate reduction program. We're able to address the missing middle for teachers and first responders by having a program that fits their needs. The beauty of our regional structure, especially for Topeka, with our members, again, 93% of our members have less than $1.5 billion in assets, is we rely on Topeka not only from the standpoint for liquidity, but we also rely on it in terms of them understanding what's going on in our districts so we can tailor these programs. In Nebraska, the MPF program is very important to our members in Kansas, Oklahoma, and Colorado. So I appreciate the question. I just want to reiterate that without it, we'd have less mortgages happening and we'd have less home ownership in our district.
Yeah, and maybe tell me how it's different than other secondary options that are out there.
Well, it's the programs that we have that also allow us to do the rate reduction programs and to be able to customize programs along those lines. In addition to that, as a member, I'm able to look at the MPF program through the lens of what the cost is. And as I look at that cost, for a lot of our members, they don't have internal mortgage programs that they can spin up to become a Freddie shop or a Fannie shop. This is it. Without the MPF program, they would not be able to originate mortgages.
Mr. Donovan, let me continue with that. FHL banks have offered programs like MPF, like I said earlier, for 30 years. And during that time, the country's experienced several instances of stress, right? Like we talked about earlier, 08, 09, and again in 2020 after COVID. So how did the programs perform during those very stressful financial stretches, I guess?
During times of crisis, over and over again, the banks have demonstrated that they're counter-cyclical liquidity providers. When other sources of funding contract, the home loan banks are able to be there to make sure that their members have the liquidity they need to stop contagion if there is contagion in the market. It's a really important role. They're the first responders.
So how did they perform from a credit loss experience during those periods, and did they do better or worse than the national average, would you say?
Well, the banks have never taken a credit loss on an advance because it's fully securitized lending and over-collateralized advances. So they've performed very well during those periods.
Thank you very much. I yield back, Chairman.